Hello, everyone, and welcome to this market recap. It is April 10th, 2025, and the time is 4:30 New York local time. Guys, my name is R Trades. I'm back here with another video. I am a professional criminal defense attorney and amateur day trader, guys. I like to talk about the financial markets. I'm a prop firm trader as well, guys. If you are interested in trading using Apex Trader Funding, which is a prop firm, please make sure to use coupon code RTRADES. That's RTRADES with all capital letters, one word, RTRADES, when you enter in to buy an Apex Trader Funding account. You will get the best discount using that affiliate coupon. I also trade using a prop firm called Tradeify, and we'll see how that goes. I'm not affiliated with them just yet. Before we get into it, guys, quick disclaimer: trading involves substantial risk of loss, including your initial capital and any capital thereafter. Do not trade with funds you cannot afford to lose. This video does not constitute financial advice, and I am not a financial advisor. Your decisions are your decisions, and I am not responsible for your decisions. Okay, guys, as we get into it, let's first start with the micro NASDAQ. This is going to be the same as the full-size NASDAQ, but I keep the micro NASDAQ up because I'm not trading the full-size contract with current market volatility. Guys, generally speaking, what my trading system is I try and follow whatever the prevailing trend is, and I call it kind of ICT light. I use basic ICT concepts like fair value gaps, consequent encroachment, liquidity, and I use basic ICT concepts, but always in the mind of wanting to trade with the prevailing trend. So, for example, ICT has a concept called turtle soup, which is basically trading a reversal after a new high or a new low is formed. I will not trade the initial turtle soup. I'm not going to trade anything that looks like a reversal. I'm going to trade only things that look like they are in the direction of the prevailing trend. And so if a market is just not trending at all, if it's just in a trading range, I try and avoid those markets. All right, and that's why I have multiple symbols. Let's start with our analysis of the micro NASDAQ by looking at the big picture. So today was Thursday, April 10th. Let's first see if we had any sort of economic news that came out. So we're on TradingView. We go to the calendar and we see, was there anything on Thursday? There was. We had inflation come out this Thursday. It's forecasted at 0.3%. Prior was at 0.2%. It was actually at 0.1%. So inflation slightly lower than what was expected, which should have been positive for the market. Core inflation is also coming down a little bit, and month-over-month inflation coming down a little bit. So those things really should have been positive for the market, but as we can see, we ended up down over 4%. So that really has a lot more to do with fears over tariffs than it has to do with inflation. Those are good inflation numbers. Okay, guys, if we use our handy dandy trendline tool, which is one of the tools on TradingView that I like to make a lot of use of, we can see that the market basically started its downtrend somewhere in late February, and it has been trending. The prevailing trend has been down since. We did have, I think there's a channel tool. Right. So we had something of a pullback or a flag on the daily chart that happened between Tuesday, the 11th of March, and Wednesday, the 26th of March. We have since now continued trading lower. If you're using traditional technical analysis, you would take the top of the move there to the flagpole, and then we'll duplicate that. We're going to want to clone that, and you're going to want to add it to the breakout point. So if you're using traditional technical analysis, that period from Tuesday, the 11th of March to Wednesday, the 26th of March, we can see that the market formed what we now look back on as a bear flag, and it was pretty much perfect. Exactly twice from the breakout point of the bear flag is where we made the low. We made the low on Monday, the 7th of April, from a total peak to trough from when I think the downtrend started of 27% or 6,000 NASDAQ points. So if you were using traditional technical analysis and you're taking twice the size of the initial move, that actually worked out pretty exactly, actually. All right, guys, looking specifically at today's trading, we can see that it was a down candle, a red candle that ended Closed slightly below the midway point. So we had a high today on the NASDAQ of 19,384.50, a low of 17,918.25 for a total range of 1,466 and a quarter. That's 1,466 quarters. That's a huge range. That's a 7.5%, 6% total range, peak to trough on the day. I'm not sure whether that low was reached after the circuit breakers could be tripped or not. Just so you know, guys, the circuit breakers are 7% down as the first ones. Again, that's 7% down. Though if you're trading most prop firms, they make you stop at 5%. Okay, guys, let's get down on the 15-minute chart and analyze where some of our opportunities were using ICT concepts. And let's get on the regular trading hours. Okay, guys, so first, one of the concepts that ICT talks about is what's called a regular trading hours gap. So that's the difference between when the stock market closes on the prior day and when the stock market opens on the next day. Okay. If there's a gap there, there can be some play on the market between that gap. So we could see that we had a regular trading hours gap. The market had a low on the prior day of 19,228, and then we had a high on the next bar of 18,870. So our regular trading hours gap was 356.75. Okay. The market did, as we opened up into the AM session, the market did at 10:30 try and rally and nearly reached the low of the regular trading hours gap, but we didn't quite get there. All right, using our ICT concept of a fair value gap, we can see that yesterday on our big move up, we had a fair value gap here. This is a buy-side imbalance, sell-side inefficiency, or BISI. And then using the ICT theory of quarters, basically all I'm doing is I'm taking a fib that's 25, 50, 75, and I'm looking at how the market reacted, okay? ICT calls the concept consequent encroachment, and then for order blocks, it's mean threshold. So going into today, remember that from my perspective, I'm always trying to trade in the direction of prevailing trend. What does that mean? That means I'm only taking shorts today. Yes, the market rallied in the afternoon, and I'm going to be honest with you, I probably wouldn't have traded the afternoon session. If I did, if I were, I can talk about where you could have traded in the afternoon session. So if you caught this reversal, that's nice, but I am tailoring, we'll call it ICT Lite, or my analysis using ICT concepts, trying to trade in what I believe to be the direction of prevailing trend. And using our handy dandy trend line, we can see that even though we had a rally in the afternoon session, nevertheless, the prevailing trend for today's action was clearly down. So I'd only be looking to take shorts. So I'm looking at the ICT concepts with that in mind. Okay, first trading opportunity here on the 15-minute chart, which I think is a nice time frame to use, would be this long wick here. Okay, the consequent encroachment of that wick would be 50%. So we had a what's called a long wick inefficiency. You can see that the market made a 15-minute candle rally before it plunged lower and went to about the 75% point of that fair value gap or buy-side imbalance, sell-side inefficiency. So this, if I'm looking at points in the market where if I'm looking back and saying this would have been, in line with my system and it would have been a good entry, this is right where I would have wanted to enter the market on these two candles. Now these two candles, another trading opportunity to get short came later in the day because the body of these two candles forms what's called an order block. An order block in ICT terms is not the same thing as an order block that you're looking on the depth of market. It's just basically a pullback or where the market has changed directions. Okay. Now you can make an order block using the wicks, but ICT talks about focusing on using the candle body. So when I'm looking at an order block, I typically use the candle bodies. So the next opportunity in the afternoon to get short was the 50% point of that order block there, and you could have put a stop loss above this candle's high or this candle here, and that came in pretty much exact, and that would have given you the opportunity to make about a 400, call it 400 points or 300 points which is still an amazing trade. Okay, so 2 points here in the market where I think that the Nasdaq gave you a good opportunity to get short. Number one would be as the market came up to the consequent encroachment of this long wick. That would have been at 10:30 New York local time. Second opportunity, I think, to get a nice short in would have been when the market came up to the mean threshold of this order block here. Again, trying to trade with the direction of prevailing trend, which right now is down. Second opportunity came at 14:30, right at the close of the day, as we went into the close. And that's that, okay? So again, using our ICT concepts, a couple of different points of entry. If you were just entering the market as it went down, then I would look for the 50% point of this BISI as a target. And I think I did something similar to that today. Okay, guys, some other markets that I want to talk about. I want to talk about crude oil. Crude oil here on the 15-minute chart, regular trading hours. Let's actually go to the electronic trading hours. Let's take a look at the daily chart. Crude oil has been similar to equities. Crude oil has been going down quite a bit. So using our handy dandy trend line tool, we can see that crude oil in the long run on the daily chart has been trading down. So if you're looking to take trades on crude oil, I would probably focus on shorts as long as this market has been going down. Moving to the 15-minute chart, we can see that crude oil has gently kind of been moving lower. All right, so again, this is an indication that if you're trading crude oil and you're trying to trade in the direction of prevailing trend, you probably want to be sticking to shorts. All right, were there opportunities in here to get long? Yes, but as long as the prevailing trend for the day is down, you want to be focusing on taking shorts. Some opportunities to take shorts. Let's take a look at our regular trading hours gap again using the quarters. See if the market got to 25% of the regular trading hours gap. It did not. So let's see if we have anything here on the side. Market was trading in buy side imbalance, sell side inefficiency from the previous day. Couple opportunities to get short. One at 11:30. One at the very start of the day. If you were trading the electronic trading hours and you were trading in the pre-market, let's take a look if we include those candles. All right, so we have an order block here. We're going to take the 50% point of that, see if the market came up to it. Not quite. All right. Let's take this buy side imbalance, sell side inefficiency, and put it into quarters. All right, so we can see that if you're trying to get long, that was an idea. I wouldn't have taken that idea, however. All right. If you are trading turtle soups, there was an opportunity here as the market came in to the afternoon session. A little bit of an opportunity to get short crude oil on the day. Really, I think your big opportunity to get short was in the pre-market. So if you're trading this, it's more of a trading range during the regular market session. If you were trading during the pre-market, the market gapped down and then left this inefficiency open. We can see this fair value gap here on the cursor. That was an indication that the market was wanting to go lower. Another indication that the market was wanting to go lower pre-market is that at 0815, 0830, these two candles here, notice that they were unable to get above that prior high on the pullback, indicating that the market might want to go lower. Then we also had a buy-side imbalance, sell-side inefficiency here, showing that the market had been inefficient price delivery to the downside. So I think your big opportunity to get short crude oil was in the pre-market, a little bit of an opportunity later in the day. All right, let's take a look at gold. Gold has been moving up tons. All right, gold on the daily chart. Again, you want to take a look at what your prevailing trend is, and gold has been trending higher on the daily chart. What does that mean? That means you're going to be looking to take longs on gold for the most part, okay? Let's go down to the 15-minute chart. This is the pre-market session here in the lighter shaded blue. The regular trading hour session is in the darker shaded blue. It was pretty much all up the entire day today. If we look at during the regular trading hours when the stock market is open, there was a regular trading hours gap and the market came down, almost kissed that 25% point, and then it was just straight up from there. If you're trying to get in on pullbacks, there was a little bit of a pullback at the 12 o'clock mark and then at the 1300 mark. That did pull back a little bit. Gold is kind of like oil in that these are really markets that you want to trade early in the morning, in my opinion. They move a lot in the pre-market session, whereas the stock indices move more during the regular trading hours. But with that being said, let's see if there was an opportunity here from an ICT perspective in the overnight session. You have buy side imbalance, sell side inefficiency here that the market at 0500 came down and touched the 25% point. That would have been a nice entry point. Again, if you were trading gold today, there was really only one direction to trade it, which was up. You could have entered any point at any point at market and made money long. So gold has been moving higher as well. All right, guys, there was a little bit of a prop firm issue on trading the currency futures today. I don't really know anything about what happened or why that is, but everything has been pumping against the dollar. These are the euro futures, so let's take a look at the daily chart on euro futures. They have been trending higher. All right, so let's go ahead and take a look at euro USD on forex.com. All right. Euro USD, FXCM. I don't know why this is not working. All right, let's take a look at the euro. For all of you forex traders out there that are trading the euro, I would only be trading in the up direction. Although now it maybe looks like it could be potentially reversing. But if you were trading throughout the day, no doubt that you wanted to trade on the upside direction. The euro has absolutely been pounding against the dollar with very little pullback. So the only thing I'm going to comment here is to say at any point during this time, you should not have been looking for reversals. You should be looking just to hit the market long or look for a small pullback to get long, guys. So again, this is all about my point of trading in the direction of prevailing trend. Whether you can clearly see an ICT pattern or not is not that important. It's just the fact that you're getting that direction right. Okay, one thing I do want to mention is the market here in the Euro USD. If you're just looking for kind of technical places to enter, notice that the market made a high here, right here, and then the market came back down and used that old resistance as new support. You should not have been trying to trade this as a reversal. You should be trying to trade this as a continuation, and that's exactly what the market did. So the euro continues to pump against the US dollar, although coming into the latter part of today, this looks like maybe the start of a new 15-minute trend, although I'm not going to say that for certain yet. But there you have it. All right, guys, this has been my analysis of the markets today. It was a down day overall for stock indices, big day for gold, losing day for crude oil, and then pretty much all of the currencies were up against the US dollar today. So final thing I want to look at is the Dixie. And you can see that the US dollar index here on the hourly chart has just been sort of plummeting. So the dollar's been losing against other currencies. Although it looks like maybe we're coming into a little bit of a reversal or a pullback now. It's possible. So I wouldn't completely bet on that trend continuing. But as for today, the dollar was definitely a lot weaker. Thanks, guys, and this has been R Trades back here with another video. Appreciate your support. Please make sure to like, comment, subscribe, and follow me on X. Use coupon code RTRADES, all capital letters, all one word, RTRADES, on Apex Trader Funding for the best discount and to support your boy. Bye-bye.